The RSI divergence is literally like the keystone of all profitable trading strategies, and I use it like almost all the times. If you have been losing money as a trader, be it in crypto, forex, or stocks, understanding and trading RSI divergence, exactly the way I will be showing you in this video, will certainly make you successful in your trading. There is a lot with this RSI divergence that you guys really need to know, that you don't get stopped out and you don't get in too early. A kind of a very delicate thing. But if you can be able to spot it correctly and take entry, the result will be awesome. First of all, let's set up the RSI indicator. You go to indicators, then you go to oscillators, because RSI is an oscillator. Here is relative strength index, which is the RSI. You click it, it will take you to this page where we have parameters. We should leave the period as 14. Then let's go to levels. In the levels, we have 30, 70, and 50. If you don't have 50 in your own, click add, and here you type in 50. After that, we come here, we bolden this line a little bit, and then in visualization, we set it in all time frames. We can use it in all the time frames, and then we click OK, and it's all done. This is the RSI indicator. RSI divergence is simply a disagreement between the RSI indicator and price. Whenever a divergence is spotted, there is higher probability of price reversal. In spotting RSI divergence, basically we are looking at the tops of the market and also the bottoms of the market, and we are also looking at the tops of the indicator and also the bottoms of the indicator. We are looking at a situation where the tops of the market disagreed with the tops of the indicator. Like in this situation, we have the market printing a high higher than the previous high, and then if you look at this indicator is having an equal high. So this is a disagreement. You can get that clear by putting a line. This is a higher high, and the indicator created an equal high. This disagreement is what we call divergence. Whenever the disagreement is spotted, there is higher probability of price reversal. It is telling us that this market may likely reverse and start selling. And what happened? It reverses and changes direction and started selling. Let's go to Euro USD. When we look at Euro USD, it is very obvious that this market is having an equal high. This high and this high are equal. But when we look at the indicator, the RSI indicator is having a high and a low. This is a sign that this market that has been bullish may likely reverse and start selling. And what happened later? The market reverses and started selling. You can use this strategy to trade stocks, crypto, or forex, regardless of who you are as a trader. And you can trade this strategy in all time frames. You can trade it in smaller time frames. You can trade it in higher time frame. But the higher the time frame, the stronger the reliability of the signal. Okay, let's look at another example again. Let's look at GBP USD. This market has been bullish, printing higher highs, higher lows, higher highs, higher lows. Coming to this level, it printed the high and another high higher than the previous high. But when you look at this indicator disagreed. This indicator was supposed to print a high higher than this high, but instead it printed a low lower than here, while here is higher than here. So this is a perfect example of a disagreement, stating the fact that this market have higher probability of reversing. And what happened thereafter? The market reverses and started selling. Let's look at the bullish version of it. Let's look at CAD JPY. In CAD JPY, market printed a lower low like this. The RSI printed a high and a low. So this is a perfect disagreement, telling us that sellers are exhausted. And what happened thereafter? The market reverses and started buying. The issue is most traders take entry far too early after spotting RSI divergence without waiting for a confirmation or proper change of momentum. If you get into early, it's like you fighting the momentum. And this is one reason why some people trade divergence and end up not being profitable. So the question now is, how do we take good entry with this strategy? For us to have good result with this strategy, the first entry criteria is that after spotting a divergence, you should wait for a change of trend. One easy way to identify change of trend is by the use of a trend line. So after spotting a divergence, just like here, the next thing we need to do is we pull a trend line and we connect the higher lows. That is the first entry criteria. The second entry criteria is that the divergence must happen in an area of overbought. So if you look at this is an overbought region because this RSI is touching 70. And the last entry criteria is that the candle that will break the trend line must not break with a pin. It must close below the line with a full body. If you look at this candle broke this line with a full body. So after when we spot this signal, the next thing we are supposed to do, we are to take a sell, put our stop loss above the resistance, and our take profit will be ×2 of the stop loss. Let's look at NZD USD. In NZD USD, the same entry criteria applicable. After spotting the divergent, the first thing we are supposed to do is put a trend line and ensure that the market break and close below the trend line. So after that, we take entry at the close of the candle. If you don't take entry here, then you take entry at the next candle and you put your stop loss above the resistance and trail your take profit, or you put your take profit like ×2 of your stop loss, and that is it. Let's look at one more example, USD CAD. If you look at USD CAD, you will notice that this low is lower than here, but the RSI gave us a high and a low. It disagreed with the price. The RSI is giving us oversold already. The divergences that happen in overbought or oversold region will give you higher probability. So we put a trend line, connect the lower highs and wait for the market to break above the line, and we take a buy. We put our stop loss below the support, and that is it. If you be disciplined enough to trade only this strategy exactly the way I have shown you, it will change your trading history for good. If you don't really understand this strategy, then I advise you watch this video multiple times until it sinks into your brain. This will be the end of this video. If you find any value in this video tutorial, then encourage me, at least for the time I spend in making this video, by clicking the subscribe button below and turn on the notification bell. It is free and it does not cost any money, so that whenever any new video is released, you will always be the first to see. Also click the like button and drop your comment at the comment section. Thank you and bye for now.